Hello everyone and welcome back to the course. In this video we're going to be talking about geopolitical events. So geopolitical events are next down on the hierarchy of importance to central banks. We want to monitor the central banks for interest rate data, monetary policy statement, and any insight into the current economic background of that country. Past that then, the next most important macroeconomic event to keep in mind is geopoliticals. Geopoliticals are real-world events that affect a country or the global economy. Things like trade relationships and trade tensions, recessions, pandemics, and wars, things like this, these are all geopolitical events that weigh down on a currency in one way or the other. Some examples of recent days are Brexit and the coronavirus. Okay, so we saw how the entire global economy pretty much came to a halt as a result of the coronavirus pandemic. And of course, Brexit providing some ongoing issues for the UK and for the Great British Pound in terms of forming any form of recovery. Okay, we can see investor demand is down, as we spoke about in the first video. Investor demand is down because the future of the UK is rocky. And that is a way that we're seeing Brexit weigh down on the Great British Pound and the UK economy as well. So geopoliticals are things like this, and they're very real, and they do provide some significant weight to currencies. So geopoliticals actually cause uncertainty for market participants, for investors, and for traders. As we've just mentioned, Brexit made the pound markets particularly volatile. News releases, headlines, and the overall uncertainty and stress that the Brexit scenario has brought to the UK has affected the pound markets. We got volatile days, okay, and the pound market going crazy. And then we've also got overall a long-term downtrend where we're seeing weakness continue to slide into the markets, and we're seeing investor demand continue to fall. Geopoliticals can dramatically strengthen or weaken a currency. It depends on what kind of geopolitical it is, okay, but things like recessions and wars are going to weigh on a currency for a long time. Yeah, and this actually provides trading opportunities against that currency. Okay, so let's say we are looking at USD ZAR. So that is the US dollar versus the South African rand. Now, the South African rand take a hit for a long time due to a recession, and that provided some great uptrending opportunities to buy the USD against the ZAR. Okay, so that is how a recession can actually provide trading opportunities, and how geopoliticals are showing themselves in the real life market scenarios. So rising oil prices will boost the Canadian dollar against other currencies, and the reason being, Canada is one of the world's biggest oil producers. Okay, and when we see oil prices rising, the Canadian dollar also continues to rise and also see some strength against other currencies as well. So that is another example of how the geopolitical background affecting oil prices can then affect currency prices as well. So overall, geopoliticals cause a change in supply and demand for a currency. If a currency is weak, it's going to lose its demand. On the contrary, if a currency is strong, demand will enter the market and take up supply. These changes in supply and demand cause a change in currency values. Okay, so if the geopoliticals are pushing investors away from a currency, the demand is going to fall, supply is going to rise, scarcity will decrease, and the value will decrease in turn. And on the flip side, if currency is strong as a result of some geopoliticals, demand is going to flood into the market, supply is going to be taken up, scarcity will increase, and prices will increase with it. So changes in supply and demand cause a shift in currency values. When demand falls, currency become less sought after, and the value will fall in suit. If the demand rises, supply is brought up, making a currency rise in value. So that is how supply and demand affects the markets as a result of geopoliticals and real-world economic events. So some examples of geopoliticals, we have referendums like the Denmark referendum, the Crimea referendum, and the Brexit referendum as well, all of which caused a stir for their respective currencies. These referendum and elections have ongoing effects. Okay, so for example, Brexit is still weighing on the pound now, after 4 years. This is going to have an ongoing effect for the foreseeable future, to be honest, while everything gets into place, okay, while the UK becomes independent and everything comes into place. We have G7 and IMF meetings. These are meetings amongst some of the world leaders, and the news headlines from these meetings can cause big spikes in the market, providing unpredictable trading conditions. This is a bit less of an ongoing effect. Of course, it's only going to last for as long as the meetings and the conferences are taking place. But news headlines as a result of these meetings can cause big spikes and unpredictable trading conditions in the market. We've then got things like recessions and wars and pandemics, which are going to provide long-term negative weight for a currency, forming strong downtrends. Okay, and on the contrary, if we're trading against that currency, as mentioned in the USD South African Rand example, then we can actually get some strong uptrends. Okay, we just have to learn how to play the market in line with the geopoliticals to make a profit. So how are we going to use geopoliticals? If we can understand geopoliticals and we understand the way that they move the market, we can use this to filter our trade ideas. We don't want to be buying into a recession, okay? We don't want to be buying the South African Rand if it is falling deep into a recession. And we don't want to short a currency when the market or the economy is booming, okay? So if things are going really well for the US, for example, or there are fiscal stimulus packages, as we're seeing as a result of the coronavirus pandemic, in place, pushing money into the markets and into the economy, we don't want to sell against this. Okay, if we know this is going on, we know not to sell against that, and we're going to avoid some losses. So we want to follow geopoliticals, which isn't really too much of a hard task, and then trade in line with the economic backdrop. So some good apps for tracking geopoliticals then. General news. Following the news is going to provide you with information on geopoliticals. News sites, newspapers, news on TV, all of these things are going to provide you with geopoliticals, because generally geopoliticals are things that are covered in news as well, such as recessions, such as wars, pandemics. All these things are going to be covered. So you can keep up with the latest headlines and the latest goings on just by following the news. If you do want to dig a bit deeper, the Economist Espresso is a mobile app, which I do recommend. It has a monthly cost. It's quite cheap though. And what it does every day is provide you with some new news stories on the major economic events and the major geopoliticals and political movements. So this is really useful if you feel like mastering the geopolitical tracking and you really want to keep up to date with it every day. And Bloomberg as well is a financial news website, a financial news company that are going to provide strong outlooks on geopoliticals and even sometimes the way that they're going to sway markets. So these are my recommendations if you want to track geopolitical events. And that is all for now. So that is geopoliticals. They are the economic drivers, the real world events, wars, recessions, pandemics, things like this that drive the market one way or the other. So we're going to keep them in line with those, okay? They are almost as important as central banks because they allow us to filter ideas and they allow us to trade in line with the trend. In the next video, we're going to move on to the lowest of the three, the hierarchy, economic data. These are the individual pieces of economic news and data releases that come out from different economies, which cause short-term spikes in the market. So I'm going to show you how we're going to use those, explain what they are, and the different levels of importance that each economic data has. So thank you for watching, and I will see you in the next video.